Wednesday. What's up, everybody? Wednesday morning. Hope you guys are having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, here to enlighten you on what is happening today in the markets, give you some ideas from an educational perspective for breakouts and reversals. If you're new to the channel, make sure you click the subscribe button, hit the notification bell so you get all the alerts, the updates, and all that fun jazz. And let's go ahead and dive right in with today's market. So starting with the S&P. We're up 30 points today after a pretty strong sell-off day yesterday. But we did yesterday have a really nice rally into what was just a beautiful area of supply. Now, this area here, this little base drop below a pivot high with a wick over wick supply area, that is a picture perfect level. Those are some of my favorite levels to look at. And as you can see, it was a confirmation entry. Well, why was it a confirmation entry? Because our 4-hour chart has actually switched to an uptrend, right? We are in a 4-hour upward trend. And how do I know that it's an upward trend? Well, we look at swing highs and swing lows. Swing low, swing low, swing high, swing high. We had 2 consecutive higher swing highs, 2 consecutive higher swing lows. And that means, hey, I can be a buyer. And so in doing so, that means also that if I'm going to take a short, that level has to be basically perfect. But it's got to be a confirmation entry no matter what. And that's why we have a dashed line. So price traded into this level. We got a really nice move away. So this moved from 43.62 all the way down to 42.97. So you were basically said, hey, here's about 50 S&P points for you. So hopefully some of you were able to catch that yesterday, make a little bit of coin on the way down. Leave a comment down below. Let me know if you were able to catch this trade and able to make any moves on this position. Came all the way back down to a 15-minute area of demand. So let's talk about this 15-minute area of demand. Price came into this 15-minute area of demand. And this area here, you got to give yourself a little bit of wiggle room below the zone. So you may have had your stop just below. If you did, you got quickly stopped out. If not, maybe you got a quick 1-to-1 or even a 2-to-1 out of the level before it then came down and stopped you out. It just didn't really hold. The demand area didn't hold. And so one of the things that I always look for when I look for the weakening of a trend is small time frame zones failing. And that's what we saw here was the small time frame zone failing, but not falling apart completely. Where do we stand right now? Well, our 4-hour trend, if I look at our 4-hour trend, we were able to get a higher high and a slightly higher low. So technically, I'm still okay to be a buyer. But boy, does this thing look weak, right? I really believe that this thing overall looks pretty weak. And so on your 15-minute chart, the only area of demand I would even consider this morning would be this area right here. 4309, 4301 on the 15-minute chart as a potential reversal trade. Now, that being said, I think it's fairly weak. I don't think it's the strongest area of demand you can live with, and I would be much more inclined, especially if we see some basing, a breakdown below this region here. A breakdown below this region here is going to be ideal. So now, can both work? You bet your assets both can work. We get a pullback into this region. You get a 2-to-1 move out of this level. It acts as supply. And then we do something like this. And then you drop away. And so those would be, an area I could certainly see price making those moves today. Now, what about my supply levels above current price? Well, as I look above current price and look over to the left, I see a bunch of these upper wicks here, indicating that there was a lot of selling pressure, but not necessarily indicating quality supply. These wicks are as one of our members says, think of these wicks as fingers pointing up at supply, and that's kind of what they're doing, right? When you've got selling pressure like this, I don't truly have clean supply. And so where would my next area be? Well, I've got a little wick over wick level right here below a pivot high, but that little wick over wick has already been touched once. Now, we touched it once, but we didn't trade more than 50% of the way into the level. So the level is still valid. And based upon our trade operation plan rules, I can probably still take that with a confirmation if we come into that zone. So those would be my areas of supply and demand. I don't feel super strong about the demand level down here, but I think it's okay, especially with the right arrival. I do like the breakdown below 42.76 because even though we are technically on an uptrend on the 4-hour chart, we're still in a downtrend on the daily. We're still a downtrend on the weekly. And so, ultimately, I believe that there's a greater chance that prices are going to continue to drop into this region down around in here on the weekly chart. So let's look at the NASDAQ. So in the NASDAQ, we had looked at a potential breakdown yesterday below 14,072 while we were in our live trade room. Once again, if you don't join our live trade rooms, go to tradersarmy.com, learn a bit more. We'd love to have you become a member. If we can't help you make 3 S&P points a month, because that's the membership cost, then we're doing something wrong. That's really what I talk about. No level right here truly exists. So I see the 15-minute area down here. Unfortunately, we did not quite make it down into that level twice. So while the level still exists, it has to be a confirmation entry because we came close to it without getting in. So I always switch those to confirmation entries. I still do believe that this area here is valid, just like in the S&P. That's a decent little area that's got some validity to it. And then when I look up a bit higher to the left, I don't see a lot of great supply. So we could continue to rally up today, and there's not really a lot of great supply for quite a while. All right, so those are my S&P and NASDAQ levels. Let me take a quick look at crude oil. And I'm trying to keep these videos around 8 minutes long, only because that's what the YouTube algorithm likes those numbers a little bit more. So I'm trying to keep these videos around 8 minutes long. But if you want some further elaboration, please send us an email, send me a text, and I will gladly elaborate and help. Or put it in the comments down below. I do take a look at those comments. So crude oil continues its march higher. After the State of the Union last night, we saw another spike higher. We did see a little bit of closing on the high yesterday. We've seen a little bit of a pullback off of the highs starting from the European market open, but not a tremendously large pullback. I normally would like an area right here and say, okay, this area looks pretty good, which it is. It's pretty good, not great, right? That right there is it's a level formed at really the worst time of the day, right? So when I look at this on a 15-minute chart, I'd like to find a level that's formed at a slightly better time of day. While this level is still legitimate, it's just a little lower probability just due to the time of day that it was created. I do, however, really still like the origin of this move up down here, right? This 1-hour chart has the origin of this move up right down here. I just don't know that we're going to retest that anytime soon. So as we continue to head north, just look for pullback areas as an opportunity to get long. We could also see this area here be very much in play because, look, prior area of resistance, old resistance oftentimes acts as new support, and so you could consider both of those. So I'm going to make this a confirmation entry, only because structurally it's fine. It really is. I mean, it's just the time of day that it was created that makes it a bit weak. And then gold, snooze fest. We're still in between our major areas of supply and demand in gold. No real reason to take a trade on either one of these. We looked at a little iron condor yesterday that had a 3-day expiration, and we're still in between those areas. Shockingly, because sometimes that doesn't happen. That it does that. It's putting in a little bit of what I call the Batman cowl trade. As this looks like I call this the Batman cowl right here. Oddly enough, the new Batman movie I think opens this week. But this is typically a sell-off pattern. So I would say that if you get a retest, maybe back up into here, you do have an opportunity for a small short off of the Batman cowl trade. So, all right. And that's all I really have for today. Let me take a quick look at cryptos, as I've been looking at cryptos. An announcement, by the way, is that crypto options are going to start soon. Options on these micro Bitcoin and micro Ether futures are happening soon. So that is another avenue to trade these items. but look for a retest back to the gap fill area in here. Man, it's putting in a really nice potential breakout setup, though. Right? I mean, you've got a pure symmetrical triangle, 1, 2, 3, 4, 5 touches. So a breakout could occur. Remember that on a symmetrical triangle, your breakout is typically going to be the move from touch 2, either up or down. And if we break out to the downside, that puts us right in this area of demand. So interesting setup on there. And then Ether is actually setting up for an upside breakout above this 30.47 with a bit of an ascending triangle pattern right through here. All right, well, that's all I have for today, everybody. If you guys have any questions, as always, send us an email, support@tradersarmy.com. Until tomorrow, I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.